Welcome to the Trading Lounge and the Day Ahead Report, and here we're looking at the daily chart for the US 30, the Dow, and just a bit of a rough sketch for the wave count here as such. So we're looking at wave 1 here, wave 2 here, and we're looking at the wave 3 up through here, then wave 4, then wave 5 up through here. As this is going across the 14,000 and the and a bit higher, these are like old highs from the GFC, and the S&P 500 is the same as well at 1500 and 1550 were the sort of closer to the old highs. So the other sort of important thing here too is that, well, the important things is that you know, we are at old highs, so there is volatility there as well. Secondly, is that in a wave structure, there's the beginning, there's the middle, and then there's the ending of the structure. So we've had the beginning of this run, the middle of this run where the most powerful point in the structure is, and then we get to the end of the structure. So there's a beginning, a middle, and end in a trend, and you need to know where you are in that, and the same with corrections as well. So we've got this sort of ending structure here, and the Australian market's the same at going into 5,000 as well, and above it, below it, and so forth. So we've got a series of third and fourth waves to be sort of navigating through this, but just take this with a pinch of salt, of course. But that's kind of what we're looking at in a nutshell. So, so the indices will be doing this, but you know, stocks can still have their runs up as well. When I look at Woolworths and ANZ and those sorts of stocks, they're also 2/3 of the way up in their trends as well. So you know, they've had their 1s and 2s and 3s, and they're into their 4s and 5s as well. So that needs to be sort of understood, really, because it can get a bit swingy up here as such. So just sort of bear that in mind and take that through to whatever you're trading in terms of indices and stock. And of course, the dollar, bonds, those sorts of things will be doing pretty much the same to the downside. So just sort of drilling in here a little bit, it looks like we've got like a little triangle pattern in here for top of wave 3, and triangles occur in wave 4s. They don't normally occur in wave 2s, so they're a wave 4 sort of phenomena. So let's have a bit of a look at that, and that's what we're sort of looking for here in a sense. So we're looking for wave 3 here, and the Elliott triangles are an A, a B, a C, a D, and an E wave here. That may even be complete there as well, by the by, because each structure within here is 3 waves. So triangle is a 5-wave sideways pattern, and each structure having 3 waves within that. So just so if that is the wave E and that's completed there, then we'll see wave 5 to the upside there. Of course, we'd want to see, you know, support on the 1400 before any longs, unless you're sort of scalping. But there can be another move down through here as well. So because they're in 3, they're all corrective patterns, and they can expand on themselves. Most triangles we know are diminishing triangles, and this is an expanding triangle. So that's that. So the other thing too is that they're not going very far. That's the other point, because even when we do get wave 5 to come in through here, it will only be wave 5 to here or such, and then we'll see that will be the wave 5 of wave 3, and then we'll see wave 4, and wave 4 normally pulls back to the wave 4 of 1 lesser degree, the same as this 4 pulling back to the 1 lesser degree here as well. So that's what we're kind of in for. So just larger swings, and when you think about it, we've still got just the arrival at 14,000. So it's arrived. It has its reaction find support. Once support is established, an accumulation process has been established, then it's got built the energy to push up to create the first high above the level. The first high above the level normally runs out of steam and then folds back to the downside here. If I've got this wrong here and we don't have a triangle here, and this is actually the wave 4 here in terms of an A and a B and a C here, then we'd be looking for this to be up for wave 1, back for wave 2. Wave 3 would be up, wave 4 and wave 5, creating the first high above the level, and then it would fold over that way. So either way, we're not really going to miss much. Yeah, so that's it really. The S&P 500 is the same. The European markets are slightly different. If we have a look at well, the FTSE here, just in sort of simple terms, it's working across the 6,300 here, the same as our local market working across the 4,900 here. And all I can say here is that there's a couple of ways to count all this. This is why I haven't labelled it. But if the 63 develops support and it's just not enough to shoot up it, it's got to come back, and breakout's important, retest is more important. So that's what we need to see here. There's a possibility that it can move up from here because we got this 5-wave structure here. So just give it time. If support is found, it'll push up through there and struggle within group 1 here. But if support is found, then you can move up from that point there. The DAX is a little bit different actually, and as we were looking at yesterday, we were looking for we weren't sure in terms of 2 possibilities, but we were looking at this being a structure down here, either the 3rd wave or the wave C. You kind of take a bias to the 3rd wave because normally wave C is not as sharp as the wave A. So the wave, this strong move down here, really had the personality of a 3rd wave, and also it was sharper than the A wave here. So we were looking at a 38.2 retracement level back to the 7,700 and then a move down. Now this move down here will be in 5 waves as well. So it may only be in its 4th wave here, retesting 76 here. So the 1, the 2, the 3, the 4, one more little low in here, perhaps into the 75. If the 76 becomes a support, we'll then scale in through there using group 1, the 10, 20 and 30. If support is found on 30, then you're right to go to the upside. The Australian market as well, it's approaching 5,000 and it will get there, and there'll be sharp sell-offs. There'll be large orders sitting both long and short here, of course. But essentially working across the 49 here as a corrective pattern. It may not be finished. If support is found on top of group 1 here, the 49.30, then you can look at 49.50, and then we'll be making new highs from that point, and we can move further up from that. But I just don't know how large this swing is going to get, because I'm not quite sure if that E-way on the S&P 500 is actually sort of complete here. This is just a 15-minute chart on the ASX 200 CFD. While it's above this trend line here, you can stay long. The metals have been a bit weak, but they should strengthen up now, because copper's pulled back to that 38.2 retracement level, close to the 372. So the bias for this is to the upside. This little move down here appears to be corrective. This appears to be impulsive, and this appears to be corrective here, and this impulsive here. So gleaning support on 49.20 is a start, but 49.30 would get you to the 49.50, the midpoint there. So worth a bit of consideration, but it can make a new high above here as such. But like I said, the breakout is important, but the retest is more important. So just work those levels there and build the trade in there, and also use the 40 as well. All right, let's have a look at the currencies. I meant to say commodities. So oil here. It appears that from oil, we're looking at the move down from profit taking number 8 here, 98, down to the next minor level, which is 95. Always expect to bounce in this case. It does appear that we've actually got 5 waves here down through here. So that means that we'll have to label this an A wave, and after 5 waves we get a 3-wave counter trend, which is probably the A here, the B here, and the C here for the B wave here, and then a C wave down here for the wave 4. Because we got 5 waves here, that means we should get another 5 over here. That's one of the good things with Elliott. It could take this lower than this as well through here. It just depends on how high the B wave goes. If the B wave is quite sort of shallow or medium, then if it's low, then it will be low here. If it's high here, then it will be a flat correction here and move up from that point there. So let's just see how that goes. But that sharp move there appears to be the A wave, a B and a C from there. The copper market pretty much doing sort of what we expect it to do, come back to 38.2 retracement level as wave 4 here. That should be an A and a B and a C. Wave 4s can get complicated, so we may see something bigger and sort of uglier here. But the main point is that, well, we'll use 72, but long as it stays, technically, as long as it stays above the top of wave 1 here, then it's still a bullish case here. So it could still be testing for new for demand here. So we'll just give it a bit of time. But the point being is that it's getting into a position where we should see a move to the upside. As such, commodities stocks tend to extend in wave 3, but commodities can extend in wave 5 there. But it does appear that the extension is in wave 3, so we can pretty much just assume to take wave 1 and wave 5 to about the same length as there. So we'll be looking for a structure about this size here, approaching this area here. Once that's complete, then we'll see another A and a B and a C over through here as well. On we go with that. The gold market, as you know, if you're looking on the 4-hour chart, we're kind of looking at this move down here as wave 1, and looking at this as an A and a B and a C here for wave 2 here, which would leave wave 3 moving to the downside here. So we need to wait for a couple of things here. Sometimes gold runs with stock, and other times it can do the complete opposite. So it's good to work out what it's doing in that sort of sense. We need to bring in the US dollar as well with this as well. So we're seeing the US dollar sort of rallying there somewhat. So look, if it is a wave 2 here, and we're looking for a wave 3 to the downside, then at the minimum you need this group 2 here as resistance. You know, it needs to have a clear sort of failure up here, and it needs to retest the 72 and the 65. It's got to show you some sort of resistance here. Then you can have a crack at that by gleaning a small position here and looking to add to the position under the medium level here, 1650. So that's like the Elliott count. As far as the trading levels go, while the market's above the 1650, this is positive, and also why it's above the 1672 there. It's moved up, but it hasn't retested it as support. But if it did that and then climbed up to here, then would look at long, well, you just trade what you see, and we'll be looking at long positions there. So it's good to have the Elliott and the levels saying the same thing, and at the moment they're not. So one's calling it to the downside, others calling it to the upside there. So let's just see how this plays out a little bit further through here, and see if we get support on the 1680 up here, or we're going to be stuck under here. If we're stuck under here, then the shorts can go there. It's pretty much the same for silver as well, in the same situation here. But you know, if the 32 becomes the support, well, then it's a long trade. If the group 2 here become the resistance through here, then you can start looking at a short trade from this point here. So and adding to from the midpoint here, 3150. So just let this. You can see that it's working itself into a corner. So just allow that to complete itself and unwind there a little bit. But when you're looking at something sort of like this, it's a bit sort of corrective and ugly and so forth. Just always remember that from corrections the next trend is engineered, and that's that's what you need. Most people fall asleep at this stage because they're looking at not what they want, but it's a time to really sort of focus in and be very diligent at this point here. Alrighty, let's have a look at FX this time. This chart here is US bonds, and of the bonds pretty much move with the US dollar and opposite to stock. So this particular move that we're seeing down through here and correcting sideways through here is of course the opposite, still same, but opposite because in a downtrend to the stock market. But so what we're looking for here is this sideways pattern through here. We're looking at wave C to complete up through here somewhere at the 144. Once that's complete, we'll see further downside here. So that's kind of why we sort of understand that stock will push higher, and the dollar will also continue lower as well. So it's just another sort of indicator. So of course the dollar, this is the dollar now on a 1 hour chart, the other one was a 2 hour chart. So we've got this sort of rallying through here. As we're looking at it in a corrective situation, but in terms of an A and a B, the B wave didn't come back as low as it expected to, and then a C wave up. This can also be countered too if this spike here on the Fed's meeting through here, it can be countered in a impulse wave to the upside if we included that. So I just need to do that as well. So that would be a wave 1 here, that would be a wave 2, that would be a wave 3, an A, B, C for the wave 4, and the wave 5 here, and that's kind of nicely finished there, which would be a sort of counted like this here. So it's just an alternative count, but it does fit, and it needs to be sort of acknowledged in terms of the 1, the 2 here, because it didn't go below the previous low here. And then looking for wave 3 up to here, and ABC for the 4th. And you can see a nice little 5-wave structure within here. So, you know, one way or another that we can be counted this. So one way or another we should see further downside from here, but it may be limited. So just sort of pointing that out through there. So, but once again too, that we can expect selling pressure to come in here from the supply levels, this block of price and volume over through here. So there will be resistance here. So we shouldn't expect this to it's more likely to move, you know, to sort of stall here, which will give a bit of opportunity for a push side up in the indices. But in saying that as well, as I've just mentioned here, we need the bonds to complete up here and roll over as well. So just sort of, you know, the stock, the dollar, the bonds, they're kind of ready to turn, but they just haven't turned just yet. So so we may end up with in our bullish weekly cycle, Thursday can be a bear day, opening higher and trading lower, and that would leave Friday and Monday for the bull day, moving to the upside. Okay, so just moving on to the euro here as well. Now the DAX fell out of bed quite sharply, as you've seen when we're looking at the indices, but the euro didn't really follow that much. So I thought that was sort of interesting. We'll see which one pulls back into line. But as you know, from this move down through here, this is in 5 waves. So we can expect an A and a B and a C wave back up here for the B wave, and then the C wave down. Now from this low here to this little high here, there is 3 waves in there, and it has pulled back sort of 50%. So, you know, we could put that B wave into here, and then look for 5 waves down in the C wave here. So that's an important point there. So we just need to drill into that and just have a look at that a bit closer in here. So this is just a 3-minute chart here, but So this is the counter we got so far. So this A wave down through here, which would be obviously this A wave here. This B wave here, we're looking for this in 3 waves. So we're still looking. It does have 3 waves in here. And if I point those out to you, in here, that's the A, the B, and the C here. So it's possible that that B wave, if I bring that chart back, is actually done and dusted in here as such there. But we also need to consider that it's not complete, and we'll look for a C wave, an A, B, and a C here before we get the 5-wave structure to the downside, which should be about the same length as this, but perhaps on more of an angle like this here, hopefully. And then if it's on an angle, then we know that it's slowing down. Excuse me, slowing down as well. So now, the little B wave here. So basically an A and a B and a C here. That should be there should be the A. That should be the A wave there. So we'll just change that there while we're here. So that would be the A, the B, and the C wave up to here. So the C wave would be in 5 waves moving up through here, if that was going to be the case. So it'd be something like the wave 1, A, B, C for wave 2 here, and this would be the 3rd wave unfolding through here, probably up to here, and a 4th and a 5th. Now, if it can move up through here, taking out the low of, I'd have to sort of say this one here actually. That little guy there, perhaps, maybe that one and that one. But look, a clear break up through there would be taking this move here into the price territory of this wave here. So that would see further to the downside, because if this was wave C folding down here, then this would be wave 1, wave 2, wave 3 here, and wave 4 here. So it would have to fail and go straight down from here. So if this finds, say, 135.15 here as the retested resistance, then you know that that this B wave is actually over here, and that's completed, and we're looking down for wave C down here further. So yeah, just try and sort of understand that. But the other point is that if this is the A wave here, the B wave here, and we do get 5 waves in the C wave back up into this area through here, then you've got a short from up at this area here, down from that point there. You won't miss it if it doesn't pan out, because you can use the 15 here or the 10 here to work the trade to the downside, but it will get bouncy off the old low here in 135, of course. The Australian dollar broke lower from that triangle pattern, and we'll have the target down at 103 here. So this is this little wave structure here. As you can see here is wave 1, wave 2, and wave 3 down to here in 5 little waves down through here. This is a 15-minute chart, and wave 4 here. Normally wave 4 pulls back to the wave 4 of 1 lesser degree, or 38.2% of wave 3 here. So also wave 4s can get quite complicated and messy. So I've labelled this here as little A, B, C here for the A wave, the B wave here, and little C wave here. But I could quite easily see more expansion within wave 4s, and that's why we don't normally trade wave 4s as such. So it could get a little bit larger as such, just expanding on itself, so to speak, another little 5 waves up here before it moves to the downside. So wave 4s are tricky. It's kind of good to find the balance line in them as such as well, so with all corrections as well. So just finding where that balance is between, here, and once that balance line, wherever it is, becomes the retested resistance, then you can short it from that point there. So that's that. Once this has come, this number here is quite important as well. It's the 10272. It's a 272 number, so 272s and 772s carry more weight than a normal 72. I know that's a mouthful, but there you go. So if you're trading short this triangle down, then you want to be locking in profits at 103 and also in this range here as well. But maybe not straight up, but in due course you'll see this number play out as a very valuable point along the way. So, alrighty, well, that's it really. So just be careful of Thursday. Thursday's got announcements coming out. In most announcements come out on the Thursday. In Australia, we've got the unemployment figures coming out at 11:30, so day traders need to be mindful of that. We've also got reporting season starting as well. Now, that can be a positive or a negative thing. Today we've got Telstra, NAB, News Corp and TAB coming out, but they're kind of coming out. They'll start coming out faster now, so you just need to be mindful of what you're trading and just check to see who's reporting so you don't get caught out. Okay, so if Thursday is a bear day and it opens higher and trades lower, then if it trades lower on lower volume, then we can expect Friday and Monday to be up. So we'll be trading long from that point there. And that's it really. So alrighty, well, good morning and good luck.